Hello and welcome. You're tuned into the Small and Mid Cap Show. I'm Heeral Dadia, and with me is Harsh Saita. Harsh, a very good morning. Clearly, if you see from a market's perspective, from the day's low, you've seen a good recovery that has come in as well. We actually managed to inch above the 21,700 mark, but not holding those levels pretty closely. We are at 21,680 as we speak, but gains of around almost 0.9% coming in there. Let's quickly look at the top gainers. Adani Ports, Adani Enterprises. Two top gainers in terms of today's day of trade as we speak. Tata Motors is seeing a good run today, back above the 800 mark, and you have a Hero Motor which is seeing a good up move. Kotak Mahindra Bank also trading in the positive. On the losing end, you have names like Nestle, ONGC, Britannia, UPL, as well as the HDFC Life. These are the ones which are trading under pressure. Let's pull up a Bajaj Auto also on the screens on the back of the buyback and see what that stock is doing in trade, because pre-open did indicate a good up move. There was some cooling off that happened. There you go. Just a 1.5% up move now in terms of Bajaj Auto, and that's mainly on the back of the acceptance ratio at retail level, which will be absolutely on the lower end. If you see in terms of Bank Nifty as well, again, you're seeing a recovery after yesterday's session. We're nearly at the day's highest levels in terms of Bank Nifty, with 11 advances as well as one decline coming in there. And you have a Bandhan Bank, which is the top gainer with gains of 2%. Kotak Mahindra Bank, PNB, ICICI, as well as a Federal Bank, which are seeing gains little over 1%. Whereas you have a AU Bank, which is seeing cuts of almost 0.3 to 0.4%. So that's what the markets are looking like overall. But Harsh, overall, if you see in terms of broader markets, what's the trend that you're picking up? Because getting into 2024 as well, the anticipation initially was that probably you will start seeing some profit booking there, but the run has continued.
Absolutely, and the run seems to have continued, but the outperformance is not visible, at least in trade today, which is a little bit of a surprise. So good morning, Hiral. Good morning to everyone. Let's quickly pull up the Nifty Mid-Cap Index, up around 0.4% or thereabouts, versus around 0.75% where the Nifty is currently at, and Nifty Small Cap largely in line with the benchmark. So that's a positive. Quickly on to names. Some of the names which are buzzing in trade within the mid-cap space. You have the likes of the Nykas, which are continuing to gain in trade well today. You're also 6+% in trade up higher for Nykaa. You're also within the Nifty Small Cap basket seeing good gains, the likes of an IRB gaining up 7% after a good set of December numbers, which IRB seems to have clocked. Positive reaction on that stock. Within the negatives, you have the likes of a Bikaji, a KEI, which are trading with cuts of around 1% or thereabouts within the small cap space. But in terms of specific names, you also have the likes of a GMDC up around 6% on the back of environmental clearance for their lignite plant, or rather expansion of their capacity, which will add substantially to their top line. We did speak about IRB Infra. You had within the large cap names, you had the likes of a Tata Motors, which came out with numbers up 2%, and you also have the likes of a Fino Payment applying for a small finance bank license, up around 2.5% in trade. So those are largely the names. But one of the stocks which is in focus, we have Skipper in focus today. The company has received approval to raise roughly 200 crore via a rights issue. Record date for that is set on as the 12th of January. The company's order wins have been good. The Q2 orders stood at roughly 6,000 odd crore, and the Q3 order wins also continue to be quite strong, and there is a good bidding pipeline as well. So we have the management with us largely with regard to what's going to drive growth on execution of some of these orders. We have Sharan Bansal, who's the Executive Director at Skipper Limited, who's joining us on the show live. Good morning, Sharan. It's a pleasure having you.
Good morning.
So Sharan, talk to us. What's the plan? 200 crore rights issue. Where are you planning to utilize this 200 crore? Because on a balance sheet size of roughly 800, that's a large amount.
Yes, sure. As I've been guiding for about a few quarters now, looking at the robustness of the sector and the strong order win performance that the company's had, we are expecting a very healthy top line growth of at least a 25% plus CAGR over the next 3 years. Now, to obviously with this growth of revenue, we can expect that the working capital requirements of the company will also be going up. The idea of the management was that the entire working capital should not be only debt funded. There should be a fair amount of equity funding in that growth of working capital as well. So the 200 crore issue proceeds will largely go towards funding of increase in working capital, and some amount will be for general corporate purpose as well. So that essentially was the idea behind the rights issue, to fund the next set of growth for the company.
Right. Sharan, this is Hiral on the side. Now, with regards to where the rights issue is concerned from here on, overall, is this something which will be utilized mainly from a FY25 perspective, or are you seeing utilization happening in FY24 itself? That's number one. And number two, which segment of business are you expecting, that will drive growth?
As of now, the company is calling in about 25% of the entire rights issue as application in the rights issue. So you can assume roughly about 50 crores will be received in this FY24 itself before March. And the balance amount, the company has not put a firm date, but tentatively we expect to receive it by March 25. So that's the outlook when the entire rights proceeds should be received by the company. In terms of business outlook and segments, of course, our engineering segment and infra segment both have been doing very, very well. Not just because of the rebound in transmission and distribution orders in the Indian market, but also globally, because thanks to the renewables push, there is a large amount of T&D investment that we are seeing in many key markets where we operate. That is the flavor of the season almost everywhere that we see. And we expect this trend to continue over the next 5 to 10 years. As renewable investments pick up pace, we should see more and more investments going into power transmission. That's the addressable segment for us. Again, our polymer segment has seen very healthy growth in the first 6 months. And we do expect that on the back of our national ad campaign, we should be seeing more and more sales growth in that segment as well.
Right, Sharan. Sharan, I just want to try and understand the execution of your order book. Roughly 8,000 crore is the order book you are currently sitting on. Please correct me if I'm wrong on that count. But talk to us about execution. By FY25, how much of this are you looking to execute?
September, it was about 6,000 crores. We do have a bidding pipeline of more than 12,000 crores for which we are expecting orders, and every day orders are coming in as we speak. The execution cycle of these orders you may expect to be roughly between 18 to 24 months. Of course, the government of India is very focused on providing connectivity of power transmission to 500 gigawatts of renewable power. So we can expect that, yes, execution will not be a challenge for these contracts. And of course, we do have a fair share of export orders as well in this overall order book. So 18 to 24 months is what you can expect the execution to take place in. Plus, of course, as we go along, new orders will continue to flow in.
Right. Sharan, polymer business is something where you are seeing good traction that is coming in. So overall, what's the trajectory looking like on that front? Number one. And overall, if you see, apart from the way the order book has been growing, how are you expecting the revenue mix to change?
Business, you're right. We've seen almost 40 to 50% growth in volumes as well as value over the previous 6 months. With the back on the strength of our national ad campaign, we do expect that momentum to continue. There is a strong push on the water distribution sector by the government of India through projects such as Jal Jeevan and Awas Yojana, etc. So there is definitely a lot of demand coming in there. In terms of the revenue mix, we do expect that because all our segments are growing well, we should continue to see a 20-10 mix. 70% on the engineering side, 20% on the polymer side, and 10% on the infra side. Now, give or take 5% plus minus each in each segment, we do expect that mix to continue.
And are some of these new businesses, Sharan, margin accretive for you? Is that a positive as well going forward? So how will margins move?
Definitely, it is on the radar of the company to improve bottom lines as we go ahead. This is a very good time for us to be able to do that because we are enjoying an order book where we have, almost full revenue visibility over the next 2 years. Also, the company has consciously been moving to more and more export markets and more business coming in from developed markets. So we do expect that to contribute better to the margins. And in terms of overall, currently we do expect that yes, margins will continue to be healthy from here on.
Right. Another question, Sharan, I have is the share of the non-T&D products, which includes railways as well as telecom. Now, that in the overall order book almost stands at around 42% for you. Taking the kind of orders and the capex that the government has specifically with regards to railways, how are you seeing that basket expand and how could Skipper be a beneficiary?
Our main segment focus continue to be power, T&D and telecom. We are there in the railway segment, although we are not a large player there. Telecom currently constitutes bulk of this non-T&D order book that you see, because we secured some large contracts from BSNL in the previous financial year. We expect that both power, T&D and telecom will see good growth in the years ahead. That's the two focus segments for us. Telecom because of the overall 4G, 5G rollouts that various operators are continuously investing in. So that should continuously see growth. Of course, power T&D for us is not just an India play, but also a much more global play. Where we are active in about 65 countries worldwide. And, again, as I mentioned earlier, renewables are driving the need for more and more power transmission connectivity in a number of countries.
Right. Sharan, two quick questions with regard to borrowing. Where does your borrowing head from here on? Would you continue to fund some of the growth to borrowing? Of course, you're doing some amount of equity. And point number two, at what cost is this coming at? Because your interest cost seems slightly elevated. So just trying to understand what is the kind of rate of borrowing?
Our current rate of borrowing is about 8.5% to 9%. And this, of course, there's opportunity for this to come down as interest rates ease and the company's performance gets better. And of course, we are quite focused on bringing down our working capital number of days as well. The way we look at it is that the long-term borrowings of the company are only about 250 crores and roughly about 500 crores is what our working capital borrowings are. We feel this is quite comfortable. Our company has very, very healthy cash flows, so we don't see any challenge. Still, to be extra sure about the growth going forward, we've decided to bring in this equity of 200 crores through the rights. If there is need be for further growth through equity, company would be open to that in the future as well.
Right. Last question, Sharan, coming to you is clearly from a guidance perspective, revenue growth in excess of 25% CAGR for the next 3 financial years is what you've already, told the investors. And now taking into consideration the opportunities that already stand in the renewable energy space, the kind of bid pipeline that you have for the international markets as well, taking all of that into consideration, do you see any upward revision on that front, on the top line as well as bottom line? And to what's the milestone that Skipper wants to achieve in the next 3 to 5 years?
Well, I think it's a little premature to talk about the milestones of 3 to 5 years ahead, but certainly we do expect to hope to surprise the market on the positive side, where revenue performance is concerned, and hopefully come back next quarter on your show with a better guidance and more improved guidance going forward as well.
Sure, Sharan, we look forward to that, and it'll be a pleasure having you again on the show. But for today, thank you so much for all of that perspective for our viewers. It's time for us to slip into a very short break. We will be back with discussing the Zee Sony merger. So stay tuned.